Today we're going to be looking at a pretty interesting trading indicator called Range Filtered Trend Signals by AlgoAlpha. This tool is all about trying to help us figure out when the market is trending and, just as importantly, when it's just chopping around in a range. We're going to dive into what this indicator is all about and how you might be able to use it in your trading. If you find some value in what we cover, do me a favor and hit that like button. Now, to get this indicator onto your charts, you'll first want to head over to TradingView, which is the platform I'm using here. If you haven't signed up for TradingView yet, I'll drop a link in the video description for you. Once you're there and you've got your chart loaded up, say any currency pair or stock you like on any time frame, you're going to click on the Indicators button. Then in the search bar, just type in Range Filtered Trend Signals. You should see it pop up. It's the one by AlgoAlpha. Go ahead and click on it to add it to your chart, and you can even click the little star icon next to it to add it to your favorites for quick access later. Ladies and gentlemen, this is the Range Filtered Trend Signals indicator. So what's it all about? Well, at its heart, it's designed to give you a clearer picture of what the market is doing. It tries to cut through the noise and tell you if we're in a solid trend or if the price is just stuck in a consolidation phase. It does this by using a pretty clever combination of a few different technical ideas to help you make better informed trading decisions, especially by trying to reduce those annoying false signals. So when you look at this indicator on your chart, what are the visual components? Well, the first and most obvious thing you'll see after adding this indicator to your chart is a gray line with circles at the end of it to indicate trend changes. This is called the midline. It's gray for both bullish and bearish trends. And later on, we're going to be using it as support resistance levels to take trades. And then under or above the midline, depending on whether the trend is bullish or bearish, we're going to have the trend line. It changes color between green for a bullish trend and red for a bearish trend. The indicator also colors the candles based on the trend, as you can see. It's green for bullish, red for bearish trends. Now, during transitions between trends, you're going to see this gray zone that basically indicates a ranging market. And these are areas where you wouldn't want to be taking positions, or if you have any existing positions and the indicator changes to gray like this, you would want to start exiting your positions. And that's it for the visual components. Now let's really peek under the hood and dive into the settings of this indicator, because you can definitely customize this thing to your liking. When you open up the settings panel by double-clicking on the indicator or hitting the little gear icon, the first tab you'll likely see is Inputs. Right at the top, you've got the Calman Filter section. First up is Calman Alpha, which is set to 0.01 by default. This setting, according to the info we have, primarily controls the smoothness of the indicator, so adjusting this will affect how smooth or how closely the indicator follows the price. Next is Calman Beta, defaulting to 0.1. This one controls the sensitivity to trend changes, so a lower value might make it less sensitive, filtering out smaller wiggles, while a higher value might make it more reactive to potential new trends. Then there's Calman Period, set to 77. This setting controls the time horizon of the indicator, meaning it determines the look-back period the Calman filter uses for its calculations. A longer period generally looks at a longer-term trend. And Deviation at 1.2, this one controls the distances of the bands from the midline, so it influences how wide those volatility-based range boundaries are drawn around the central trend line. Moving down, you have the Supertrend settings. Here you'll find Supertrend Factor set to 0.7 and ATR Period set to 7. These are your classic Supertrend settings. The ATR Period sets the look back for the average true range, which measures volatility, and the Supertrend Factor is a multiplier that uses that ATR to determine how far the Supertrend line is plotted from the price. Adjusting these will change how the Supertrend component behaves, influencing its responsiveness to price and volatility. Then you've got your colors, pretty straightforward. Bullish color lets you pick the color for when the indicator signals a bullish trend, and it's set to a nice green by default. Bearish color is for your bearish trend signals, and that's red out of the box. This is how you can customize the look of your indicator to easily spot the trend direction. And at the bottom of the Inputs tab, there's a little checkbox for Inputs in Status Line. If you tick that, it'll show the current input values like the Calman period or Supertrend factor right there on your chart status line, which can be handy if you're experimenting with different settings and want a quick reminder of what you're using. It's great that you have all this control to fine-tune it if you want to dive deeper. For now, I'm just going to click OK and keep the defaults. All right, back to the range-filtered trend signals indicator. So how do we actually use this thing to trade? Well, the first thing you're going to want to do is just observe what it's telling you. Look at those color-coded signals and the bar coloring. Is the indicator showing a bullish color? That suggests an uptrend. Is it bearish? That points to a downtrend. Or is it showing a neutral or ranging color? That tells you the market might be consolidating. You also want to pay attention to those range boundaries it plots. The strength and direction of the trend can often be gauged by how the price is interacting with these levels. The way this indicator really works its magic is through a few key steps. First, it uses that Calman filter we saw in the settings. Think of this as a smart smoother. Its job is to cut down on all that random market noise, the jittery price action that doesn't really mean anything. But it's designed to do this without making the signal lag too far behind actual trend changes. It tries to stay reactive by dynamically adjusting itself based on how volatile the market is. So it's not just a simple smoothing, it's trying to be a bit more intelligent about it, giving you a cleaner view of the underlying trend. Next up, after the Calman filter has done its job of cleaning up the price data, the indicator applies a Supertrend calculation using those factor and ATR period settings. Many of you are probably familiar with Supertrend. It's a popular trend-following tool, and here it's used on that already smoothed-out data to help identify the trend direction and spot potential reversals or continuations. And then, here's a really crucial part, the range-filtered bit of its name. The indicator incorporates a volatility-based range filter, likely using that deviation setting we saw to set how far out those bands are. This creates dynamic upper and lower boundaries around the price. Now, this is super important because it helps the indicator distinguish between a true trend and just choppy, sideways price action. If the price or the signals generated by the indicator break out of these dynamically calculated boundaries, it's taken as a confirmation that the trend is likely continuing. But, and this is key, if the signals or price stay within these boundaries, the indicator interprets that as the market being in a consolidation or ranging phase. This ability to distinguish is really what helps in trying to filter out those false signals that can happen when a market isn't really going anywhere. Now, for a bullish setup, we first of all want to confirm that the market is bullish. That's going to be indicated by having the trend line be colored green and the price consistently trading above it. You can also check the candles to see that they're colored green by the indicator to confirm the trend is bullish. Condition number 2, you want to wait for a market pullback. This is where the price comes all the way down and touches the gray midline. Now here's the tricky part about this pullback. The price needs to touch that gray midline without closing under the green trend line. It can touch the gray midline with a wick, that's fine, or if it breaks below the gray midline, it cannot touch the green trend line. So it's a bit discretionary, but a good pullback is one where it either just touches the gray midline with a wick, or it can briefly close under the gray midline, but then a few candles later, it closes back above the gray midline, and all this happens without it touching the green trend line. Once a candle closes back above the midline after this kind of pullback, it's an indication that the price found support at the midline and is preparing to go back up. That is our cue to take a long position. You want to place your stop loss right under the most recent swing low and also make sure it's below the green trend line. And for the take profit, you can target a risk-reward ratio of 1 to 1.5. You let the trade run, and hopefully the trade is profitable. Now, for a short position, you're going to do the opposite. First, you confirm that the trend is bearish. This means the trend line should be colored red and the price should be consistently trading below it. The candles themselves should also be colored red by the indicator. Next, you wait for a market pullback where the price comes all the way up and touches the gray midline. Again, that crucial detail, the price must touch the gray midline without closing above the red trend line. It can touch the gray midline with a wick. If it breaks above the gray midline, it cannot touch the red trend line. So a good pullback here would be either touching the gray midline with a wick or briefly closing above the gray midline, and then a few candles later closing back below the gray midline, all without touching that red trend line. Once a candle closes back below the midline after such a pullback, it signals that the price found resistance at the midline and is preparing to go back down. That's your signal to take a short position. For your stop loss, place it right above the most recent swing high and also make sure it's above the red trend line. For the take profit, you can again target a risk-reward ratio of 1 to 1.5. You let the trade play out, and hopefully the trade is profitable.
So to sum it all up, the range filtered trend signals indicator by AlgoAlpha is trying to give you a more reliable way to identify market trends and ranging periods. It uses that Calman filter to smooth out noise, then integrates Supertrend for trend direction, and finally that very important volatility-based range detection to help confirm trends and filter out choppy price action. The idea is to provide clearer signals, reduce the fakeouts, and ultimately help with better trade timing and identifying more optimal entry and exit zones. The color-coded signals and alerts just make it easier to use day to day. Now, it's really important to remember that this is not financial advice. The strategies and explanations here are based purely on how the indicator is designed and described. Any trading involves risk, and you should always do your own research and consider adding your own price action analysis, fundamental analysis, or other confluences before making any trading decisions. This indicator, like any other, is a tool, not a crystal ball. If you found value in this video and learned something new about the range filtered trend signals indicator, please remember to leave a like, or even better, consider subscribing to the channel to stay tuned for more content like this. Thanks so much for watching, and I'll see you in the next one.